You're not going to believe what's been happening over the last month, because right now, parts of the Canadian housing market are flashing warning signs we haven't seen since the 1990s. Over 1,000 homes across the GTA just went to power of sale. Not listed, not sold, locks changed, people evicted, equity gone. The Bank of Canada just confirmed it. More than 1 in 4 mortgage holders are paying so much interest, their debt's actually getting bigger, not shrinking, getting bigger. People are shelling out thousands a month just to fall further behind. So here's the real question. If this is what the start looks like, what happens in the next 12 months when more than 1 million Canadian households hit renewal? Power of sale listings across the GTA have exploded by over 900% in the last few years. This is the sharpest spike since the last major housing crash, and it's already hitting families who thought they were safe. People with stable jobs, clean credit, no missed payments, still lost their homes the moment their mortgage renewed. You go to bed with a $2,500 payment, wake up with $3,900. That's a 56% payment shock in a single renewal cycle. Thousands are underwater and most don't even know it yet. Because once you're 90 days behind, it's already too late. You're no longer negotiating, you're being processed. This is the power of sale system. And right now it's moving fast. In some GTA neighborhoods, we're seeing more and more of these forced listings show up on MLS in clusters, like damage spreading across a map. That means even homeowners who are doing everything right are about to feel the impact. Because these fire sale listings drag down the value of the homes around them. Your equity disappears the moment your neighbor's house sells for a discount. And banks don't care about your timing or your plans. They care about recovery. Right now, they're moving faster than most sellers even realize. If you think you're safe because you've never missed a payment, here's what the data shows. If you've got a renewal coming in the next 12 to 18 months, and your income hasn't gone up by 20% or more, you're exposed. That's who this video is for. First, I'll show you exactly who's at risk right now. Second, I'll break down the 3 early warnings almost every seller ignored. And third, I'll give you a 7-day plan to protect your equity from this power of sale wave. And if you need a simple one-pager that you can print or send to a family member, I built one for free. It's linked below. But before we go there, you need to hear this next part. This surge is not just a Toronto problem. It's bleeding into Hamilton, Mississauga, Durham, Halton. Even outer regions are seeing unusual spikes in lender activity. This is regional contagion, and the numbers show it's accelerating. I've had families in Hamilton lose over $100,000 in equity just because of one power of sale next door. I've had investors walk away from entire down payments, and I've seen homeowners who thought they had time get hit with lockouts after a single missed renewal deadline. So if you think this doesn't affect you, this next section is even more important, because the next domino is the one most people don't even see coming. And by the time it hits, your options shrink to zero. The number one risk right now isn't falling prices. It's what happens when your mortgage renews and the math doesn't work anymore. Because your lender doesn't care if you're a good person. They care if your numbers hit the threshold. And when they don't, they move. Most people think default happens after months of missed payments. But in this market, it starts with a renewal letter. You go from $2,500 a month to $3,900. Most families don't have the buffer. So they start pulling from credit lines. Then the cards, then they fall behind. 3 missed payments and it's over. Now imagine that happening not to one person, but to thousands. This is a pressure wave. And here's the trap. Even if you're on time with your mortgage, you're still exposed because that fire sale down the street, it pulls down your home's value, hits your refinance cap instantly. Even if your house is fine, your options shrink anyway. That's how people get trapped. Now listen carefully. In about 60 seconds, I'm going to show you the number that flips this entire situation on its head. It's the number that shows this isn't about real estate anymore. It's about a full-blown credit failure. But first, let's talk about the second wave most people are missing. Insolvencies. Right now, personal bankruptcies are exploding across Canada, and not just by a little. They're up over 20% compared to last year. And if the current pace holds, we're on track to break the all-time bankruptcy record by the end of this year, higher than the crash in 2008, higher than any point in modern history. That means the system is already breaking down. Because when you file insolvency, you're locked out of refinancing, you're blocked from renewal, you lose access to every option, and that's what leads to forced sales. Not because people are reckless, but because the system gives them no exits. Now here it is, the number I told you about. Toronto's mortgage delinquency rate just jumped by 60% in a single year. And for the first time since 2012, it's higher than the national average. Toronto isn't following the collapse, it's leading it. Because once the banks see Toronto cracking, they tighten across the board, not just here, but everywhere. They stop extending grace. They stop negotiating timelines. They move to recovery mode. And when the banks start liquidating, everything moves faster. Inventory spikes, prices drop, and panic kicks in. Now that you've seen the real numbers, let's talk about what this means for you. If you're up for renewal in the next 12 months, you're on the clock. If you're thinking about selling, you're now competing with listings priced 10 to 15% below market. And if you're already behind, you've got days, not months. That's why I built a free one-page cheat sheet. It shows the red flags lenders use, what they watch, what they trigger on, and how to buy time if you're stuck. But this next part is even more important because what's coming isn't just a financial event. It's a confidence collapse. And if you don't understand what that looks like, the third wave won't give you a second chance. This is what the panic phase looks like. It starts with headlines about foreclosures, then it shows up in the listings, the price cuts, the vacant driveways, the calls from lenders telling homeowners to pack. But here's what matters right now. We're not through the worst of it. We're walking straight into the most dangerous stage, the false calm, where everyone assumes they have more time than they actually do. Sellers wait for a rebound, buyers wait for the perfect deal, and the banks, they're already moving. They're seizing assets quietly, dumping them fast, and clearing risk before the end of the year. That means the middle class gets hit next, the suburbs, the two property owners, the people who think they're immune. So what do you do now? Here's the 3-move defense that keeps you ahead of the banks. Step 1, lock in your renewal outcome. If your mortgage renews in the next 12 months, don't wait for the bank's letter. Start now. Get a full debt to income snapshot. Check your ratios. If you're above 42%, you're in the red zone. That's the new stress test threshold banks are using right now. You need options lined up before the lender runs your numbers. Talk to a broker, shop private backup plans, know your escape routes. That's how you survive the renewal trap. Step 2, beat the appraisal trap. Power of sale listings drop neighborhood values instantly, and it doesn't matter if your home is clean. Appraisers use comps, and a discount sale down the street resets your baseline. That can wipe 10% of your equity in one shot. I've seen families in Hamilton lose over $100,000 from a single comp. Here's the move most sellers miss. They wait to see what sells, but by then the damage is done. You need to track forced sales the moment they hit. Check MLS daily. Flag any property with quick close dates or vacant staging. Those are your early warnings, and if you see 2 or more in your zone, that's your signal to list before the comps turn against you. So what do? You time your listing or refinance before that wave hits. You flag any forced sales in your area, and you control the clock before the comps control you. Step 3, here's why timing matters now. This isn't a market cycle, it's a credit failure. Here's what the data shows. Insolvencies are up 20% year over year. Delinquencies in Toronto jumped 60% in a single year. Banks are dumping homes at a discount. Time becomes your biggest risk. That's why I built the seller survival plan. It walks you through the exact renewal math lenders use, the debt service coverage ratios they're tightening right now, and the backup financing routes most brokers won't tell you about. It's the same framework I use with my paying clients. Grab it now, read it, send it to someone who needs it, because this next phase is going to feel slow until it's not. 1 week you're stable, the next you're locked out, and the system doesn't blink. Here's how to think like the CFO of your household. You manage risk, you protect equity, and you play the next move before the bank does. That means running the numbers every quarter, stress testing your renewal, and keeping 6 months of liquidity in reserve. That's the minimum buffer when renewal rates jump 50% or more. Not because you're paranoid, but because you're prepared. Move now, be first, and stay liquid while everyone else locks up.